Well, thank you all so much for joining us here today. So maybe just to start, if you can each give just a little bit about what your companies do in both Canada and the U.S.
Starting with me?
Yes.
All right, perfect. Well, good morning, everyone. So the Boyd Group Services actually participates in the $50 billion North American collision business. We've got about 1,000 locations now across the United States and Canada. Been in business since the early 90s with the Boyd Group, and actually the Gerber brand, which is how we trade in the U.S., has been in business since 1938.
So, Murray Mullen, good morning. The Mullen Group, we were actually a private company back until 1993, then we went public, and since then we've acquired a number of other private companies in both Canada and the United States. So today we operate a pretty large logistics and trucking company. We have operating in 4 segments, distinct segments of the logistics space, which is massive. Everybody knows, everybody talks about logistics. And our largest segment right now is our less than truckload side, and that's all in Canada, less than truckload. Our logistics and warehousing side, which is involving logistics, handling a lot of longer haul freight. And then we have our US 3PL, which is involved in both customs and US 3PL, dealing with international freight, and it's based out of Chicago. And then we have our specialized division, which really was one of our largest segments until there was a decline in the energy space in Canada. And then we pivoted away from that and went more into the consumer side of the economy. So that's our business today. We're doing over $2 billion and have 8,500 employees, both Canada and the United States.
Ajay?
Yeah, good morning. Ajay Virmani. I'm Executive Chairman of Cargojet Airways. Cargojet in Canada started right after 9/11. We started with a couple of planes, 727s, flying cargo. We felt there was a need. Me coming from the freight forwarding business, we were always buying space from some cargo airlines, 1-2 plane operators all the time. And the vision was basically to have an airline, because of the size of the land Canada has, the different time zones, and consistency of services was never there. Part of the reason was that all cargo airlines in Canada prior to that were part of a passenger operation, and the focus was never there. So we started an operation in Canada right after 9/11, simply because I think the challenges created certain opportunities, and we set up a cargo airline. Today we service all Canadian cities, 16 cities, every morning, 5 o'clock, scheduled network, 7 days a week. Our other segment is ACMI, where we we call it wet lease as well, where we fly 20 aircraft from various integrators throughout the world. So a total fleet of about 45 aircraft, 767-300, 757s, and we service a lot of global strategic cities, carrying about 25 million pounds of cargo. Especially during COVID, the growth we saw with the e-commerce has continued on. People's trends have changed. They're buying more on e-commerce than going to the stores. And I think, we call ourselves Canada's pipeline in the sky pretty well. It's like you need your utility and water and electricity in the morning, you need your parcels, and that's where Cargojet comes in.
Yeah. So we're here to talk today about how Canadian companies are navigating North America. And one of the big topics, obviously, this year, and that we've also talked about today, has been tariffs. So Brian, I want to start with you. For Boyd Group, you've said that they haven't really seen a lot of impacts from those tariffs. Can you talk a little bit about why that is and how you've been able to build up that supply chain resiliency?
Yeah, well, we really sell 2 main components. I mean, we sell labor, which is obviously tariff resistant. And then the other piece is parts. And the parts piece of our business is usually what's affected by the tariff environment. And as we think about our business, our parts sales are actually just a pass-through. So it actually has a very minimal impact on our business. And if anything, it has a slight positive impact to the bottom line as parts pricing go up. That said, when you think about the overall impact of tariffs and the impact it's having on price or on parts prices, which we do now start to see go, or we are now starting to see go up, about 44% of our parts business actually comes from parts that could be part of the USMCA agreement. And as we think about that, we've got to be very careful to make sure that we're using parts, one, that aren't affected by the tariffs. Two, it puts us in a position where we actually are diversifying the parts that we use. We have the ability to use what's called OEM parts, which are parts that come directly from the manufacturer of the vehicle, or we've got aftermarket parts usage. The aftermarkets piece of our business tends to be more susceptible to tariffs because it comes from countries that are more tariff oriented. Versus the OE side of the business, which actually tends to be, as I said, about 44% of those parts come from non-U.S. companies or non-U.S. industries. And those could be subject to tariffs if they don't fall into that USMCA. So we're very focused on keeping a diversified supply base and continuing to just drive value for our insurance clients.
Mm-hmm. And one of the other topics with all of this tariffs is there's been a lot of uncertainty. But even amidst this, Mullen Group has continued to expand with acquisitions across North America. How do you do that intentionally and successfully in a time when there is some of this investor hesitation?
It's challenging. It's not as easy with the rules changing the way they are. But notwithstanding that, you still got to have a longer-term vision, and you got to invest where you think that there's going to be a future. So one of the things that we did is we've been de-emphasizing the trade between Canada and the United States for some time, because in the transportation business, it's not good enough to get one load. You have to match. And with the tariffs coming in, I don't know which side of the trade gets messed up, but it only takes one to mess up two. So we've de-emphasized that. And by the way, we've seen quite a disruption of cross-border traffic. It's not as strong as it once was. What we did is we pivoted and we invested in a customs brokerage business for the very reason that Ron's talking about, is that trade is going to be more complex. It's a transaction. So we've invested in one of the largest customs brokerage companies in Canada. We just closed that deal in June. We've been working on it for a while before the trade issues became what as problematic as they become. But all of that said, our view is that all governments will want to know more about what's being imported or exported out of their countries. I don't see that going away, so we invested heavily in that. And that's part of logistics, is helping your customer navigate what's the customs rules. How do you do the transaction with the government? Can we help you out? That's all part of logistics. It's not just we just have trucks. So that's why we're a logistics company, not just a trucking company.
Mm-hmm. And for you, Ajay, as there's been trade pressures, like we've mentioned, not just with Canada and the U.S., but also with the U.S. and Europe, Cargojet's been able to grow its domestic business. So how do you play to those strengths in Canada when there is that kind of uncertainty in other parts of the world at the time?
Well, Canada is a very unique country. It's the land mass is amazing. Like, it's got 3 different time zones. Cities have, from Newfoundland right up to Victoria. And I think the key for us has been, with all this uncertain stuff, as far as domestic is concerned, people's habits are e-commerce. They're still buying. They might not buy a $100 pair of shoe, but they're buying a $50 pair of shoe. So the shipping hasn't stopped. So that's what the domestic momentum has continued, because people just don't want to go to the stores to look for little things. They might not be buying as many as goods, but they're still buying. As more e-commerce has increased, the technology certainly helped in that direction. On the international scale, the de minimis being eliminated for $800 had some impact on our flying for certain global integrators. But overall, whereas Europe might have slowed down, but Mexico has increased. So there's always opportunities that are there in our field. But I think the key thing for survival during these uncertain times is, number one, we got to keep our service up. We continue to deliver at 99.5% on time, because when people want air shipment, they don't want to hear it's 2 days, 3 days. They come to work at 9 o'clock in the morning, so they get their parcels. So service has been very, very critical. Customer obsession, which is one of our key ingredients of success. And secondly, in these uncertain times, when your name is airlines or airways, people think it's licensed to spend money. CapEx is so high, people go crazy on spending all kinds of money, no sort of discipline in that direction. So Cargojet maintains a very cost discipline, and especially through these rough times, to make sure that we got to be cost conscious and service conscious. Those are the key elements that we practice, and that's what been a key to survival in these times.
Mm-hmm. And for you, Brian, how do you kind of see the resiliency of your customer, and how do you kind of react to that? I know Boyd has been focusing on like internalization and some other efforts to kind of build up the strengths within the company. How are you doing more of that?
Yeah, well, I would say the collision space has been remarkably resilient for a lot of years. There have been some things recently that have come into play that, that have shook the industry a bit. Having looked at, having seen insurance premiums skyrocket last year as the cost of repairs have gone up, we've seen, challenges as it related to that. I would say that, in my view, the one thing about, the most, your ability to be resilient kind of hinges on your adaptability. And we've really focused in on, one, deepening our relationship with our customers and making sure that we understand how to win with our customers. Two, developing or maintaining, the great relationships that we have. And then three, investing in our technology and our technicians. So technicians for us, as you think about, one of the things that disrupted the space in 2023 coming out of COVID was the lack of available workforce. Many people got out of the space and didn't come back into the space. And one of the things that we were able to do at that time is leverage our technician development program and really turn that up in a way that allows us to graduate. We've graduated 500 people from that program today. I think it's one of the best programs in the industry. And it does demonstrate that when something happens to the business, you just have to adapt to that and have to be able to pivot. And our ability to pivot quickly in that environment is what's given us the ability over a long stretch of time to be successful.
Thanks. And for you, Murray, there's been kind of impacts in terms of capital investment in Canada, but there's still a lot of strengths that we're seeing within a lot of these industries, especially like we've been talking about earlier about the energy space and some of the hopes that people have for that. What do you see kind of the outlook being for that right now and for your company?
Okay, so we have a good portion of our business that's tied to the energy sector, and I listen intently to what politicians say and what our customers are saying. There's a lot more constructive talk, but I come from the cloth that says we need a lot more action, a lot less talk if we want to get. So I will wait patiently till I see the action before I deploy our capital into that space. It sounds good, but Canada's got some unique issues that you have to address if you're going to build a pipeline across provinces. You heard that on one of the previous panel discussions. So once that pipeline gets built, that's the go time to produce it and extract it, and that would be a huge investment thesis for us. Until then, I just got to be a little bit careful with our shareholder money, and we're focused on other parts of the economy. We think that's why we're in LTL, because we think freight will always move, consumers will always consume. And what we're focused on is how do we just do it smarter and better. And clearly that's, lends itself to the technology. You've got to invest in new tools all the time. I would say to you, it's one of the things, even though we're a diversified company, one of the common themes that we have is We must always invest in technology so we're best in class to keep our costs down. It's the only tool that I know how to keep costs down. We also use a number of third parties, independents, because to be honest with you, we can't be all company employee. Those companies are really under stress today in a really competitive market. So we have a balanced approach on how we move the product.
Mm-hmm. And for you, Ajay, Cargojet has a lot of partnerships with multinational companies like DHL, like Amazon. How do you build up those partnerships and also keep them strong at a time when they're also dealing with their own different uncertainties and impacts of trade and tariffs?
Yeah, and the key to all these partnerships, it begins with value for money. Service is critical. All of our customers are in the same business, like if it's UPS, it's DHL, even Amazon for that matter. They all want one thing, is service. And first you provide the service, and if we as a company can keep our costs down, then we can provide that value for money type of proposition. But I think key to these partnerships is giving these companies the flexibility they need, because they're in the same business. They need to scale up, they need to scale down. We understand. They need to change their routing. The flight is not going to Mexico today because they want to consolidate it for 2 days, but there's an opportunity to change the routing to Europe, maybe going to Germany. So I think the flexibility that we will provide to scale up and down, to increase the flights during Christmas time and peak times and Amazon Prime days and having enough backup capability for these people, that is very, very critical. And I think that the partnerships we have developed, where we have done some warrant deals with Amazon and DHL, and I think all these deals for the customers, it's a value-added accretive deals because they're getting their cargo services, they're investing in Cargojet, they're building, and they share a little bit of rewards in the end. So it's partnerships words are taken very lightly these days, but for us it means a lot. And I think to bring them into the partnership, you got to make them feel part of it. And by providing them the service, value-added propositions, and again, giving them something, rewarding them a little bit by being part of our success.
Mm-hmm. And some of you have touched on it a bit, but I'd like to talk more about technology and the ways that you can leverage technology to strengthen your supply chain. So maybe, Brian, if you could start about what are some of the things that Boyd Group is doing with technology right now?
Yeah, well, obviously with 14,000 employees, it's imperative that we continue to use technology to drive efficiency through that workforce. We launched a plan called Project 360, which was a $100 million cost transformation plan in our business. As part of launching our 5-year strategy, the 5-year strategy was really to double the size of the EBITDA in the business, drive us to a $5 billion business, and get to 1,400 locations. As I said earlier, we sit at 1,000 today. We've got clear line of sight into the ability to get to that, that growth plan. But the piece of Project 360 that's really hinged to technology is about $30 million of savings on the backside, of the 5-year plan that really is hinged a lot on AI. Our ability to leverage AI to drive. We write estimates when a vehicle comes in. Think about an environment where we can take a picture of a vehicle and AI can actually write the estimate because they've seen that accident, they've seen that damage, they've seen all of those things, and the ability to just de-skill that or to take, pieces of that work and turn it into, some machine learned processes for us. It really is the front office is really where we see the biggest benefits of technology. When you think about the back office or back part of our business or the direct labor piece of our business, our technicians, the best thing we can do for them is give them the technology at their fingertips to be able to stay in their stalls. When they stay in their body stalls and they're working all day long, they're producing hours. When they're producing hours, that's obviously allowing us to be more productive in the store. So we've got efforts on the front side and the back side of our business to really use technology to just drive efficiency through both sides of the operations.
Mm-hmm. And what about for you, Murray? How is Mullen Group looking at kind of the evolution of technology and how you can incorporate it into your supply chain?
It's the one part of our business that we've not cut back on spending or investing, which is technology. So we're a very diverse group, so we don't have just one technology platform that can go across for all our businesses. What I would say is this, the common theme is we invest in technology. So where we need, in our warehouses we invest, we have more robotics than we've ever had before. Most of our warehouses will be all robotics by the end of this decade. I'm pretty sure of that. On the truck side, on the operating asset, that's not us. We are putting tremendous pressure on the OEMs to say, you've got to give us a better product so I can lower my overall cost. And the biggest cost that I can get lowered is if we can increase fuel mileage. And so we put a lot of pressure on them. I've delayed buying trucks right now because, to be honest with you, they haven't brought the cost improvements to us that will help on that side. So we've been putting pressure on them on that side. It's on the labor side that we need to use AI much more efficiently, which is just data. How do we access data? How we give it to the right person at the right time so they can make the best decision at that time. And we're working with our IT groups and providers as to how you integrate them. They're the ones that are going to have to integrate it in. So we don't just give you data, we give you information that helps you do your job more efficiently. And that's where I think that's going to be the power of AI. I think that's a big buzzword, but at the end of the day, it's just better information delivered on time with what somebody needs right now to help them do a job more efficiently. Mm-hmm. So we'll have to do that.
Yeah. And for you, Ajay, how is Cargojet leveraging?
Well, Cargojet needs, definitely we need to work towards getting more AI in areas like maintenance, for example. You know, you take a picture of where the leak is. Let's say there's an oil leak, and the AI can tell you exactly what parts and where you can, just like your business, Brian, mm-hmm. you know. So we're going to move towards that direction. We're looking at it. Flight operations, for example, where the pilots are flying, what routes they should take, you know, what's the optimum weather conditions, the fuel burn, uplift of cargo, how we can maximize the payload on the aircraft. One thing we obviously can't get rid of, like no matter how much AI you put in, you can have more data and you can do a little more planning, but somebody has to physically load the planes. And that sort of is, you know, I don't see that how AI can come and load the planes and plan the, yes, they can do the planning, they can make more efficient, but I think that, you know, making the airline side more efficient with AI is our goal, and that's what we're moving towards.
Mm-hmm. Well, thank you all so much for being here today and talking more about how companies can navigate across Canada and the U.S. Thank you all.
Thank you.
Thank you.